Hi everyone, Sean Humphreys here. Welcome to All Things Retirement. In this installment, we're going to talk about tax-free savings accounts and how you can use them for retirement. Now, if you're new to this channel, make sure you hit the subscribe button because we're posting updated content all the time. If you're in the runway phase, maybe 5 to 10 years out from retirement, we've got content for you so you can develop a solid plan. Maybe you're in the transition phase, you're just on the cusp of retirement. You know there are a lot of details that you have to get looked after, and you want to have confidence and no regrets. And maybe you're already retired and you just want to stay happily retired. We've got content for you. And not just content related to the financial aspects, but we cover issues around health, relationships, the psychology of retirement, and recreation. Quite literally, all things retirement. Now, we wanted to talk about TFSAs as it relates to the whole aspect of retirement income planning because I don't think TFSAs get the respect that they are due when it comes to this whole topic of retirement. So we often think about defined benefit pension plans, defined contribution pension plans, deferred profit sharing pensions, RRSP contributions, the list goes on, or Canada Pension Plan or Old Age Security. But for many people, the tax-free savings account should be a foundational tool for their retirement income planning. Back in 2009, when TFSAs were first introduced, they really didn't get a lot of traction as it relates to group benefits plans. Now that's changed. Many organizations today now offer at-source deductions toward tax-free savings accounts for their employees. But for a long time, they were sort of out there on the perimeter, and they really weren't talked about in terms of the whole retirement topic. I think one of the reasons for that is the phraseology, tax-free savings accounts. We don't think of savings accounts as retirement vehicles. And really we should think about tax-free savings accounts as tax-free investment accounts. Now, when we try to get our head wrapped around the whole TFSA area and retirement income planning, the biggest thing we need to keep in mind is really tax brackets. Now, I'm going to give you some illustrations that will hopefully help you to identify where you should place your focus. Do I make an RRSP contribution to supplement pensions at work? Do I make a tax-free savings account contribution? What is the better option for me? Now, you can see in this listing here, the schedule, we're showing in the personal federal income tax brackets. Now, I'm going to start with the federal brackets for now, just to keep things simple, because every province's tax rates can be a little bit different. And then we'll look at a blended tax rate that looks at both the provincial and the federal tax brackets. The first thing I want to do is talk about the different bands of tax. So you can see in this illustration we've got on the first $48,000 of income approximately, the federal rate is roughly about 15% for 2020. If we have income between $48,535 and $97,000 roughly, we're at about a 20.5% marginal tax rate. And then $97,000 up to $150,000, we're at 26%. Now, the reason these bands are there is that for every dollar you earn in each band, your rate's different. So on the first 48, I'm 15%. On any income between 48 and 97, I'm now at 20%. And at 97 to 150, as an example, I'm at 26%. Now, why is that important as part of this discussion? Because when you're making a tax-free savings account contribution or an RRSP contribution, it's all about the tax deductions and your tax bracket. So very, very simply, the way you want to look at it is the following. If I have $1,000 that I'm putting into my RRSP contribution or my RRSP account, if I'm at the lowest combined tax bracket of approximately 25%, federal and provincial, I'm going to get back tax savings of $250 when I make my RRSP contribution. Alternatively, if I pull the money out, $1,000 from my RRSP, I'm going to pay $250. Now, if I make a contribution to my RRSP of $1,000, I'm at the middle tax bracket, roughly 40%. I'm going to get tax savings on my tax return of $400. And of course, if I pull money out at $1,000, I pay $400. And then $1,000 at 50% is going to give me a tax savings at $500. Now, we need to take into account these deductions to get a sense as to what makes most sense for us when it comes to tax-free savings accounts or RRSP contributions. So let's just kind of do some mental gymnastics around this a little bit. So obviously, if I'm going to be always at the marginal tax rate of 25%, meaning if I put money into my RSP, I get a 25% deduction, and then I pull it out at 25% down the road and pay tax at $250 at 25%. There's not a huge win there to making an RSP contribution. RSP contributions make incredible sense if I can deduct, let's say, at 40% or 50%, so I'm getting $400 to $500 of tax savings, and then I pull the money out down the road at 25%. Well, now I've arbitraged, that's a word we use often in our industry, but arbitrage the tax bracket. I've gotten a higher deduction when I was working, and I pay tax at a lower rate when I retire. If you can't arbitrage the tax brackets, then one of the things you should take a look at is taking into account deductions helps you to set your focus or priorities. If you're always going to be at the same marginal tax rate, and that's where working with a financial planner, doing retirement forecasts will help to give you guidance in this area, then if you're always at the same constant rate, your first priority likely should be making tax-free savings account contributions. The value of the deduction is not huge for you. Now, if you've maximized on your TFSAs and you have very little debt and you're looking for a place to park money, well then at that point maybe an RSP contribution could make sense for you. But your first priority should be the tax-free savings account. So another way of looking at that is this little teeter-totter. So saving using an RSP or group RSP is more powerful or most powerful when there is a drop during between your working years and when you have your retirement income. So again, this is just a good little illustration. So Mark's working, he's got an annual income of 150, retirement income of 70, and so before he retires, he's at about a 47% marginal tax rate, and when he retires, he's at 29%. So he's on that teeter-totter, and because he's at a higher taxable position now than when he retires, making an RSP contribution makes sense for Mark. On the flip side, let's say he's got $80,000 a year of income, but he's forecasting that his income in retirement is going to be about $70,000. His marginal tax rate is essentially the same between now and when he's in retirement. So if you have to make a decision about what is the most important priority for saving money, then likely it's going to be the tax-free savings account as the first priority. The other benefit of the TFSA is that when you pull the money out, keep in mind you've got tax-free compounding and tax-free withdrawals. There's all kinds of benefits, particularly when you get to retirement, that are income tested. So when you take money out of the TFSA, at least under current legislation, it doesn't impact some of those income tests when it comes to benefits you might receive. Whereas with an RSP account, when the money comes out, it does affect your total income, and it could have an impact on various income tests that would be out there. Well, it's my hope that you found this presentation helpful to give you an idea of how to prioritize tax-free savings accounts versus RSP accounts, which makes most sense for you. Well, if you like this video, click like and be sure to share it with people you think would enjoy this content. As well, we've got a link to a video that is related to this particular topic. Make sure that you hit the subscribe button to get the most recent content that we're uploading on a regular basis. And in the show notes, you'll be able to get to our website where we have a lot of great resources as well. All the best in your retirement journey.